I hope everybody has pen, paper, digital notebook, whatever, ready, because we're about to get into a lot here. And I had to reflect a lot on how in depth to go uh, on this topic of the history of money, fiat currencies, the banking system, all of that. But truth be told, I find it very, very difficult for somebody to understand and appreciate the gravity, the magnitude of cryptocurrencies, things like Bitcoin, Ethereum, and what the implications are in terms of future outcomes, changes, if one does not have a grounded understanding and appreciation for the history of money, of fiat currencies. So let's dive. Let's go into it. Now, to begin with, let's talk about these fiat currencies. Okay, so to talk about fiat currencies, we have to also discuss what money is and what currency is. And as always, I will have my handy dandy outline next to me so that we stay on track. But basically, if we think about money, money is that abstraction that most people think of or is implied when people think about currency. So if somebody is thinking about, oh, how much money does an individual have? That concept holds true regardless of if they're talking about euros, if they're talking about dollars, if they're talking about the net value of an asset like real estate, like stocks, like bonds. That concept effectively is what money is. And based on Investopedia, we're going to have a lot of definitions from Investopedia in this here section. Money is a medium of exchange and allows people to obtain what they need to live. Bartering was one way that people exchanged goods for other goods before money was created. Like gold and other precious metals, money has worth because for the most people it represents something valuable. Now, to get a little bit more specific, there are effectively three versions of money. You have commodity money, representative money, and fiat money. So, commodity money is something that is backed by a commodity. It's money backed by commodity. So, if people back in the day were using cows to trade with one another, that's a commodity money. Using gold, that's commodity money. Using rice, that's commodity money, right? So you're using a commodity as the form of money. So back in the day, I'm not sure if any of y'all have seen The Revenant, but Hugh Glass, he was out there hunting, searching for pelts, right? And he was going to bring those pelts back and they were going to get paid because that pelt was a form of money. It was a commodity. Now, they were bartering, selling this, that, and third, but think of it like that. And gold is probably the best example. That's commodity money. What is representative money? Representative money is something like the greenback. Representative money is a claim on a commodity typically. So back in the day, and we're going to talk about the gold standard, Bretton Woods, but the U.S. Treasury notes, those bills, they were able to be exchanged for gold. Now, ultimately, that changed and that was undone during the Nixon administration. But at that time, it was a representative type of money because that money could be exchanged for the commodity. Now, the benefit there is it's much easier to exchange. It has better currency properties, and we'll talk about that in a moment. But it is a representation of some sort of backing like a commodity. Now, what that leaves is fiat money. Now, fiat money is what you and I, for the most part, if you're watching this in your lifetime, fiat money has been the dominant thing. So fiat money, it is not a commodity. It's also not representative because fiat actually means faith. So similar in Spanish, fiel. Fiat is faith. And fiat currencies are basically those which are not backed by anything other than the faith that they will be redeemable, that they will be accepted as valuable money, as currency. And the driving factor behind that is the government putting its faith behind that currency, that fiat. So then here, if you want to take a look, this is the distinction of currency from money. Currency is what most people think about if they're thinking about money, but money is more that abstraction. Currency is what is used to exchange and transact that value of money. So the most important thing, I'm going to say the most important thing to really understand about fiat currency is that they all fail. Historically, every fiat currency in recorded history has failed. Now, fiat currencies, they serve a role up to a point in time, but they all eventually fail. So let's just take that thought experiment forward a little bit. If up to this point in history, all fiat currencies in recorded history have failed eventually, what then would be the fate of any current fiat currency? All right. Now, this is from dinardirham.com, but basically, fiat currency refers to any currency that the government declares to be legal tender. All right. Now, what I found most interesting was this breakdown right here. According to a study, 775 fiat currencies by dollardays.org, there is no historical precedence for a fiat currency that has succeeded in holding its value. 20% failed throughout hyperinflation, 21% were destroyed by war, 12% destroyed by independence, 24% were monetarily reformed, and 23% are still in circulation, approaching one of the other outcomes. The average life expectancy for a fiat currency is 27 years, with the shortest lifespan being 1 month. Now, founded in 1694, the British pound sterling is the oldest fiat currency in existence. At a ripe old age of 317 years, it must be considered a highly successful fiat currency. However, success is relative. The British pound was defined as a 12 ounce of silver, so it's worth less than 1/200th or 0.5% of its original value. In other words, the most successful long-standing currency in existence has lost 99.5% of its value. So let's read this here. The current U.S. dollar has all the characteristics of all previously failed fiat currencies. For instance, since its issuance in 1913, the U.S. dollar has lost 92% of its value. Even after revaluation in 1934, the U.S. dollar dropped another 41% in value. The U.S. has currently been increasing the supply of dollars by 13% every year to pay off its debts. Due to this, the dollar is losing its value at an alarming rate. The USD remains on the cusp, and the only future will tell which direction the currency will take. Now, let's jump for a second to one of these visual charts, because I think this can be pretty visceral in demonstrating the point. So this is a visualization of the purchasing power of the US dollar. So it starts in 1913, and let's say $100 was worth $100. And then we see it declines, it drops down at some of these significant events. We see the stock market crash, Black Thursday. We see 1944 when the Bretton Woods Agreement was signed, and then that's when the U.S. dollar was pegged basically to gold, and we'll go over that specifically. And then we see the oil crisis of 1973, and that's when OPEC, they were basically doing some embargoes. And then we see the dot-com bubble, and after the dot-com bubble, we see what happened in 2008. And basically, it's hard to even see it down here. And keep in mind, this does not even include the money printing that went on in 2020. But we see that $100 of purchasing power fell to beneath $10. All right, so $100 in 1913 would only be worth $3.87 today. Okay, so that just gives you a little perspective on what happens to fiat currencies.